Hey everyone, welcome back. Imagine this, it's the year 2126. China and Europe have slowly, over a century, sold off every single US Treasury bond they own, down to zero. The world economy is flipped upside down, dollars flying everywhere, interest rates skyrocketing, and maybe even gold bars raining from the sky. Chaos, opportunity, total fiction. Hold up, this isn't a prediction. It's a fun, extreme thought experiment. We're pushing the boundaries of what if. In reality, this might never happen. Geopolitics and central banks would intervene long before it gets this wild. But let's dive in and think big. What if foreign powers gradually exit US debt over 50 to 100 years? Who picks up the slack? Does the dollar crash? And is it a bond bloodbath or a high-yield paradise? Buckle up, this is pure speculation for your brain. First, the setup. US Treasuries are the world's safest asset, totaling around $38.5 trillion today in 2026. Foreigners hold about a third, China around $800 billion, Europe $2 trillion. Over decades, they sell down to zero. No panic dumps, just a slow unwind. Maybe de-dollarization or diversification. This is our starting point. Now, question one, who absorbs all these bonds? If foreigners bail, the market floods. Prices drop, yields rise. The Federal Reserve steps up big time, like a superhero vacuuming up debt through quantitative easing. They already hold 20%, this could balloon. But inflation risks might eventually cap their buying power. U.S. banks, insurers, and pension funds grab the lion's share. They love safe assets at higher yields. Next, American individuals. High rates could make treasuries irresistible for retirees and long-term savers. It's a rebalancing act. But if unchecked, capital could flee to other assets like stocks or real estate. Question 2. Does this weaken the dollar? Absolutely. In our thought experiment, yes, and potentially big league. Sellers convert treasuries to dollars, then swap for yuan or euros, flooding the market with greenbacks. Over decades, this erodes dollar dominance. We're already seeing hints with the dollar index hitting 4-year lows. Extreme case? A falling chainsaw dollar drop shaking global finance to its very core. Fun to imagine, right? Question 3. Is this a bond massacre era or a high-interest golden age? Let's look at both sides. Short-term, massacre mode. Flooded supply tanks prices, existing holders like banks suffer huge losses. Yields could spike wildly, echoing the chaos of the 2022 rate hikes, but on a much larger scale. But long-term? Golden era for new buyers. Imagine yields stabilizing at 4 to 8%. Real income for savers. This echoes historical shifts like Britain's yields in the 18th century. Pain for some, gain for others over centuries. Wrapping up, this whole scenario is just a wild what if. It's not a prediction, it's a thought experiment. How does it stack up against your views? Would you buy treasuries in a high-yield world or bail to gold? Drop your takes in the comments. Let's debate. If you enjoyed this ride, like and subscribe. See you next time.